Now finally we're on to the balance sheet of Gale PLC at the 31st of 12th 2004 in fixed assets. Look at it down. Intangible assets, tangible assets and financial assets. Intangible assets would be the patent of 40,000 minus the 10,000 of the patent write-off. There's your 30,000. Your tangible assets of 1043 naught naught naught. Now I've done an outer working for this for you. So you have buildings 900,000, zero accumulated depreciation, which gives me 900,000. Vehicles are 220,000, the accumulated depreciation of 77,000. My opening accumulated depreciation is 33,000, plus the 44,000 gives me the 77,000. And you can see then that the net book value is 1043 naught naught naught. Okay, if you look at the accumulated depreciation for the billings, you have 42,000 at the start of the year, plus the 14,000 on the credit side of the adjusted trial balance, minus the 56,000, which is on the debit side of the adjusted trial balance, and that brings you back to zero. Back to the answer. And we go financial assets, 240,000, that's your investments. Now you go to your current assets, generally your stock of 96,000 on the debit side of the adjusted trial balance. Now look at debtors. This is where you can make a mistake now. So I've done out workings for you here. You can see the debtors of 289 naught 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 minus the provision for bad debts of 27,000. So that would we would normally know as debtors. But investment income for published accounts, so is 11,600. It's a debtor due. It's money due from the banks. So that gives me 273,600. So there, look. There you go. And there's your 273,600 plus the bank of 48,000. Go down on there on the creditors, 163,000 on the credit side. Dividends due 22,000, which we've already done. Taxation of 158,000. The taxation of 158,000, lads, is made up of the VAT of 71,000, which is on the credit side of the original trial balance, plus the corporation tax due of 87,000 in the adjusted trial balance. So that's how much is due to the revenue. And then we go down and we look at other creditors, 63,500. And you're saying, where the hell did that come from? So your other creditors then is made up of your audit fee of 9,500, your director's fees of 50,000, and your debenture interest due of 4,000. There's your 63,500. You see, creditors are normally trade creditors. So other creditors then will be money that we owe to somebody else other than suppliers. But you knew that, of course. So then that gives me my 1,324,100. Great. Now look, we don't call it working capital anymore. We call it net current assets. Then you come down to the last part of the balance sheet. And you look at creditors amount falling due within 1 year. The bench is 200,000. Issued shares, 600,000. So that's your 400,000 ordinary shares plus your 200,000 preference shares. Your revaluation reserve, and your profit carried forward, and that gives me 1,324,100. And you're saying, geez, Pat, that's not too bad. Now, but lads, that's only worth about 70% just about 70% of the total mark. We'll stop there and let's get this bit right.